Can you guys hear me okay?
I can hear you.
Yes.
Didi, I'm ready. Didi, ready whenever you are. Good, welcome, everyone. Welcome. James Holmes Jr., Black Lion Masterclass number 11. So in today's class, we're going to have a lot of fun. So what we're going to do in the first half of the class is we're going to do the class stock portfolios. So we get to do the portfolios for all you guys. So that's going to be pretty cool. All right. So everyone gets to take their shots at presenting a stock or investment that they like. Generally, what you want to do is you want to spend about 2 minutes or so. You can go, up to 3, a little longer. Please try to keep it under 4.5 minutes, if you would. There's no right or wrong answer. We talked about the purpose of this before. The purpose of this is so that you guys get used to, there you go, flipping upside down. That's right. We're flipping upside down because y'all are running things today. You guys are running things today. So literally, you guys will take a few minutes each to give your presentations in front of everyone. We are not going to criticize anyone. We're not going to be critical of anyone at all. As a matter of fact, we're going to just really roll from one to the next. Now, here's the kicker. The kicker is during intermission, I will take some of you guys' investment ideas and I will put together a Black Lion Masterclass student portfolio. Literally, I will take, so I'll be taking notes while you guys are talking. I'm going to take your investment ideas. I will choose, some of them. I won't choose all of them. So if I don't choose yours, please do not take it personal. Do not get offended. But I will take some of those ideas and I'll put together a portfolio during our break. So after break, you guys will get to see it. And also, we will literally track those week to week. What we're going to do is we're going to take $100 and we're going to open a Robinhood account and we're going to put those in the account and then we will show you guys every week how they're doing. Now, be mindful, we're not going to get too excited after 1 or 2 or 3 weeks. But what we will do is I will literally keep in touch with you guys. I will keep in touch with you guys and I'll send you follow-up emails, 3 months, 6 months, 9 months, a year from now, because I don't plan on changing that portfolio for a few years. Whatever we put in there, we're just going to run with it, okay? The only little exception is that I will, we'll take $100 and start it with. So what I'll probably do is invest 80 of it right now, tomorrow when the market opens. And then if we have a dip in the market, a significant dip in the market, then we will put the other 20 in so that we can actually take advantage of that. Some of the things that you want to consider when you guys are doing your stock stories today, they don't have to be exactly this way, okay? Because everyone has their own different style in the way they present things and certain things that might appeal to them more. But obviously, you want a general description of the company and hopefully, a story, story of why you think it's a good stock, in essence, just a general story and outline. Hopefully, you at least have some general idea of the earning histories and the projections. Moats, if you have a moat that you can talk about, some type of competitive advantage, it's always nice. I mean, if you don't have that, like I said, we're not judging anyone today, just showing you guys some things that are good considerations. the management matters too. And we've given you guys examples of that plenty of times. I think you guys all got a pretty good handle on that. And then any financial information you might have that might be beneficial or helpful. I don't expect you guys to be accountants or financial analysts, you know, at this point at all. So we're not gonna like just be too harsh as far as how we view that. But finally is the sleep test. Now that is something that I think is very important, and I hope that you guys agree, the sleep test. And we talked about that before. The sleep test is if the stock starts to actually go down for a day, 2, a week, or even a month. How are you sleeping? Are you still sleeping comfortable or not? I will give you an example. Me and my daughters, we were just talking about this actually earlier today, before we even saw what the markets were doing. We were talking about this, and we were talking about Kathy Woods, and we was talking about how she's got a lot of haters out there, and how it's just like a lot of these fund managers just relish if she has a bad day in the market, something goes down in the market. And the thing about it is she doesn't worry about that. She doesn't worry about the haters. And hopefully it would be nice if we all get to that point. She sleeps well, whether her stocks went up that day or whether they went down that day, she sleeps well. I mean, so literally her fund, her flagship fund, ARK-K, which is her disruption innovation fund, literally the last couple weeks, that's been down pretty significantly. It's gotten hit pretty good. And some of the pundits and other hedge fund managers have been having a good time just trying to dog her out. And so look at her reaction. And I was looking at her reaction because I wanted to see how she reacted. And you know what? She never, ever got pulled down into the mud. She didn't try to debate with them or anything like that. This is what she did, was she bought more. She bought more. Remember when we talked about that? If you've done your work, and if you like a stock at a certain price and it goes down 5 or 10 or 15%, if you've done your work, you should really like it when it goes on sale. Now, if you haven't done your work, then you're probably not gonna sleep very well, hence the sleep test. And by the way, some of these outlines are standard in a business as far as the company description, the earnings, the moats, the management, and all that. The sleep test is a Black Lion original, but I think that that's real important. One of the most important things that we want to look at. So, once again, what we're going to do is we're going to do our stock stories and so forth, go through all of that. At intermission, I'm going to take some of you guys' ideas and put together a portfolio. Tomorrow, we're going to put $100 into a Robinhood account, and we'll send you guys all messages as far as what all, well, you know tonight what we chose. And you guys can follow it on your own if you want, but each week we'll have updates, and we're going to look at how that account is doing in general. We're going to look at how that account is doing against the major indexes, such as the S&P 500, the Dow Jones Industrial Average, and so forth. Also, we're going to see how it's doing in comparison to some of the big hedge fund managers. We'll pick out, I don't know, 4 or 5 of the major hedge funds, and we will literally show you guys each week how you're tracking against the big boys. The point of that is not to intimidate you. The point of that is, if this all works the way I believe it will, is to show you that there's nothing to be intimidated about. The very first time we started talking about investments, we talked about demystifying investments because it's intentionally made to look complicated. When you guys see how well you're doing against all these big boys, you will really understand that you have enough instincts and so forth to go ahead and do a good job. And hopefully you guys remember our target range, because in the end, we're not judging ourselves on how we're doing against the hedge fund managers and all. That's fun. And we're not really judging ourselves solely on how we do against the indexes. That's fun. But I'll tell you, like I told my kids for almost 30 years, we're concerned with what we do. Our target is pretty aggressive. We want to hit an average of 29% return. That's what we want. We want to average 29% return. So when we're tracking this on a consistent basis, if we see that we're up 29% or more, we know we're pacing well. If we're not up 29% or well, we're not hitting our target. So in the end, that's all we really care about is our target. Not alone is aggressive, because remember, the average of stocks just over the years is 9%. So if we do 29, we're rolling pretty good. Okay, so even if the market in general is up more than that, it doesn't matter, as long as we hit our targets. Without further ado, don't you guys like that cool picture? It's time for class participation. Look at that young Kimberly, back then Slay. Now it's Kimberly Slay Holmes. Woo! I'm probably gonna get kicked in the knee when she sees me. As you can see, we were in the same class at Drake University. So that's a throwback there for you. Look at those babies, right? All right. So without further ado, we're gonna let Dee Dee determine the order. And Dee Dee, you can mute my mic if you want to, because all I want to do is sit back and enjoy the presentations and take notes. And you won't hear from me at all until all you guys are done. So we're gonna let Dee Dee go ahead and get you guys started.
All right. Great job, Mr. Holmes. We appreciate the enthusiasm. And like we said before, we are looking forward to hearing everyone's stock stories. I will refer to the previous slide, but also I will try, if you say the name of the stock that you are going to be speaking about at the beginning of your presentation, I'll try to pull up the Google stock graph so we can have that to refer to if you would like that. If you don't like that, you can just say, I don't need that, Dee Dee. So let's see who's gonna go first. First of all, if there's anybody who wants to go first, feel free to unmute yourself and say you want to go first. If not, I'll just go in the order of it looks like the way that you came in from this list.
I don't mind
So
going first.
you don't mind going first? Is it Taja?
Tasia.
Tasia. All right, Miss Tasia. Perfect. Thank you so much.
You're
So
welcome.
let me go ahead and stop sharing my screen, and I will turn it over to you. And do you want me to show your graph of your stock?
Yes, please.
All right, Queen. I'll listen for you, and I will pull it up and share it when I get it.
Okay. So the stock that I'm going to be presenting today is going to be the ticker on the New York Stock Exchange is IVR. I, Victor, and Robin. You can just let me know once you get it. I'm also going to type the web page into the chat so that you can copy and paste that, because I'll need that as well. Okay, yes, that's it. And this is the web page in the chat. Okay, so my reason for choosing IVR, which is Invesco Mortgage Capital, is because of the simple fact that if you look at the year to date on 5 years, it shows that it has a potential of around $16. And right now it's low. And if you look at the dip happened around February, which was right when COVID took place. So this is a company that has mortgage-backed securities, and it has residential and commercial property. And not only to mention on this, it has a good payout of 30 for the dividends. So it's just my personal and my own analysis of it. It's not financial advice or anything, but I feel that it's a good idea because at the end of the day, one of the stocks that I have for commercial property and all of that, it has already started to increase. And I think this has a potential to go back up. And not to mention its price point. At the time, right now, it's around $3. So it's a lot of room for increase still, which is what I like to see whenever I'm choosing my stocks. So this company started around 2008, and it's an Atlanta-based company. So on this page, if you go down to the bottom, well, did you get the website in the chat? Oh yeah, this is a website. If you go down, you should see investor relations at the bottom. That investor relations is where you find information about the company, like if you have stocks or want stocks. This is where I always go to research the company. So you can click on that, and then you can go to stock information under the blue tab where it says, you can click on that. And this shows the dividend payout. So it pays out quarterly, which is every 3 months. And you can look at the amount that it has already paid out and the last date that it paid out to see if companies are actually paying their dividends, because it's up to the company if they want to continue. So you can scroll down on the list. Hold on 1 second. Let me check on my. Okay, look up date. You can go down to. Let's go down to November 2020 or December, somewhere around there. Here, I'm going to take a second, look at my webpage and see exactly where it's at so you can see the dividend payout. But what I'm looking for, the dividend payout for the company from like the last payment date was on March of 2021. And it had a dividend payout of about 15 cents per share. And before it went down in March of 2020 or February of 2020, they were paying up to 31 cents per stock on the dividend payout. So yeah, so usually you can find that under the investor relations side. We don't have to really worry about that. But that was my reason for choosing this stock. It has great growth potential. It has a really good dividend yield. And it's also a pretty new company. It's an Atlanta-based company. And a lot of times mortgage companies are pretty strong. So I also look at the net worth of the company. So their market cap is a $834 million company. So there's still a lot of room for the company. It's a pretty strong company. If you look at the graph on the New York Stock Exchange, you could see that before the market went down, that it had pretty strong growth over the years. So I think this dip was just because of COVID. So I feel that once everything lightens up, it's a nice money maker to keep in the bank, and you get more interest on your money than you would in a savings account. And that's my stock.
Awesome. If you guys want to hype each other up, our peers, there's reactions at the bottom of your Zoom, and you can react by giving them a clapping emoji or a thumbs up just so we can support each other. That was awesome. I don't even really know if
Yeah.
I want to go because you kind of killed the game. But thank you so much for that information. It was very thorough and detailed. So awesome, awesome job. Is there anybody else that wants to go next before I start? Kim, you want to go next? All right. Let me know if you want me to share my screen.
I'm sorry. Can you make me a host? Did he?
Yes, I can.
Okay. All right, I'm going to share the screen then. All right, so I picked, my husband told me I was using wrong color, so I tried to find blue since for Black Lion, but I picked square. And I'm gonna tell you why I picked square. So Square is my favorite stock. So Square is probably known by people as a payment facilitator. You know, I'm not gonna share my screen because I want to be able to see you guys. So I'm gonna stop sharing. You know, I'm gonna stop sharing. Hold on. So share to a lot of people, you know, share, but do you guys, most of you, I don't know if you know this, but Share owns the Cash App. Okay. And so if you guys, so if you don't know what Square is, it's a little thing you use, of course, to like if you go to a vendor and they run your card and you purchase something. So that's what Square is. But why I'm interested in it is because between 2012 and 2020, the gross payment volume that Square's network has increased from 6.5 billion to north of 112 billion last year. And if you take out coronavirus impact in 2020, Square sellers ecosystem grew GPV by an average of 49% annually over the past 7 years. So since, and another reason why I like it, because the seller ecosystem is a merchant-free driven segment. And wasn't also, I don't know if you guys know this, but recently they purchased Jay-Z. They purchased, it's called, I'm gonna go to, you guys are probably familiar with it more than I am, but it's Jay-Z's Tidal. So they purchased Tidal. And the reason they did this is because they want Tidal, all their hip hop users, musicians, and everybody to start using the Cash App so that they can make money through the Cash App. And so Square, the Cash App Tidal could be a big thing now. And so let's look at this. Now, what if Tidal is like a bad, so I started looking at merger and acquisition, kind of looking at the legal part of it. So what if Tidal is actually like not a bad, if it doesn't help them out any, then it's just okay, because Square and the Cash App is still going to survive, because over the pandemic, they're almost doubled their money. People are using the Cash App. They can't get out. They need to purchase things. They're using Cash App. So it's still going up. Now the stock is high, but I think it's a good stock to invest in. Now, what I also looked at, I started looking at some of the tweets by the CEO, and some of the things he was tweeting about this acquisition, that when he purchased the Jay-Z Tidal thing, I mean, he really thinks that the artist connection and this Cash App thing is really going to work. So that's one thing I saw he was tweeting about that. Then he also was tweeting about another thing that the Square can do for artists within this ecosystem, is that they will be using that platform, the Cash App, the Square, for payments coming to their live shows. So he's hoping that the live shows can be like, hey, you come to this live show, you use your Cash App to pay, and that would be the platform. So he's hoping that he can bring all that together. So I just see it as a growing company. I see it as an opportunity. I mean, there's things that could go wrong, but I'm optimistic that that is a good stock to invest in. And that's my stock choice.
Awesome job, Kim. Thank you so much. Of course, your husband is your biggest fan. We are too, though. Thank you so much. Mine was helpful as well. So for some reactions, guys, some thumbs up, some hand claps if you can.
Thank you, guys.
Support each other. Thank you.
I can go next.
Okay, great. Angelica?
Well,
if we're being honest, I'm a little upset because Kim chose mine. I know
Oh,
I should have jumped
wow.
in.
We both
But
think alike. Yay.
yes, exactly. That means it must be doubly good. Add that to the portfolio for sure. But I just have a couple things to add. I also think that Square is a really good option to go with. I think that Jack Dorsey, I don't know if you mentioned this, Kim, or not, but Jack Dorsey, who's the CEO of Square, is also the CEO of Twitter. And I just think that he's proven to kind of know, like, be a little bit ahead of the curve as far as like making like wise choices. And so he recently just bought up a bunch of stock in Bitcoin, which we know has like really great potential for long-term investments. And I just think like as soon as this pandemic starts letting up, like you were saying, people are going to be out more. Small businesses really like use Square a lot. And like kind of to what you were saying about it being like, it's kind of both edges of the sword. Like it's helpful for consumers, but it's also helpful for like people who need to send money or people who own businesses and stuff. So it really benefits a lot of different people. And so I just see a lot of potential for long-term investments. I think that's all I have.
All right, great job, tag teaming it, family. Little mother and daughter combo. I'm here for it. Reactions in the
go.
chat. Got okay, great. All right, Cora, turn it over to you.
Okay. My stock is QuantumScape. It's QS on the stock exchange. If you could bring that up, that'd be awesome. Okay. I'm just trying to get my notes in order. Sorry. It was founded in 2010 by Jagdeep Singh, Tom Holm, and Professor Fritz Prince of Stanford. In 2012, they began working with Volkswagen. 2018, Volkswagen invested $100 million, becoming the largest shareholder. Bill Gates just invested in it. And then they just acquired another company with $1 billion of investing. They're worth about 25 million at this time. They've gone up. They've had, rocky up and down, but with the announcements of major car companies converting over to electric cars by 2030, and their battery, their electric vehicle battery pioneer, their new technology is on track to be able to power cheap, long-range electric vehicles with commercializing its solid-state battery technology. Volkswagen, Toyota, GM, Hyundai, Ford, they're all investing in this solid-state battery. Analysts estimate that the battery demand for electric vehicles in 2020 amounted to 134 billion watt hours and should grow 13-fold by 2030, making the EV battery industry worth about $230 billion. And QuantumScape is the largest in that area. They have other competitors, but most of those companies are 2 million to 2 billion. So that they're, quite a bit ahead of everybody else. One of the reasons they went with solid state batteries because handle more charge discharge cycles before degrading, promising a longer lifetime, better safety, which means less safety monitoring electronics in the battery module packs. So that will actually save money in design. And then with Japan also declaring that they want their car makers to have electric cars, majority of electric cars by 2030. That also makes, having to have the right battery a must. And as of today, as you can see, they've gone up 13%. part of the reason why the stock has gone up though is they tend to follow whatever Tesla stock does or the other electric vehicles. The other reason that it went up is because Bellwether 10-year US Treasury bond moved, affecting the interest rate and was to their benefit. Okay. So that's my stock. For some reason I lost you guys. Sorry. Okay.
Awesome job, Cora. Let's give her some reactions, fam. Thank you for sharing that. And I hadn't heard about that stock before, so that was great. We know that electric cars is definitely a move for the future. So thank you for your forward-thinking presentation. Anyone else who would like to volunteer before we're voluntold?
I can go next.
Okay. All right, Lawan. Am I saying that correctly?
Yes, you are.
All right.
My stock is ARC Innovation. It's an ETF, and I actually own stock in this stock. And of course, my cousin James gave me the stock advice. So I'm pretty excited about that. I like the stock because inside the stock, it has a lot of weighted in other holdings, like it has Tesla, Square, Roku, Zillow, Spotify, CRISPR, Shopify. So it has a lot of other stocks inside of it. That I like that one. I like the ETFs. I've only owned it for 3 weeks now? No, maybe a month. I'm gonna say that. I think it's about a month. It's been going up. Went up a lot since I owned it, and I think it's a good stock. So I don't like to talk in front of people, so I like to keep my stuff short. So I'm done. Thanks.
No, thank you. Thank you so much. And to always have like a personal reason as to why you're investing in something, I think it's powerful. So let's give her some reactions in the chat. Thank you so much, Lawan. That was wonderful. All right. Anybody else want to volunteer? Okay. Now it's time for voluntelling. Please make no offense if I call on you, but I'll start with my husband, Zed. Let's go.
Good evening, everyone. Today I chose Walt Disney Company. And I chose Walt Disney Company because they pretty much have their hand in all markets. And just to read off a couple of them here, who they own, and this is just networks that they operate. You got ABC, ESPN, Freeform, FX, National Geographic, and then streaming services. They got Disney Plus, Hulu, ESPN Plus, and Hotstar. And then in April, they're going to reopen their Disneyland is reopening, so you can expect to probably see a jump then. And then also you have they just cleared 100 million streaming where people have joined the service. They just cleared 100 million today, and it's pretty remarkable after 18 months being a streaming service to have 100 million followers. So that's why I chose Walt Disney.
All right, Zedric, great job. Let's give some reactions and props in the chat. Thank you guys for being so encouraging. I feel like we have become a family over these last few weeks, so I really appreciate the encouragement that we're showing to everyone. Is there anybody else that wants to volunteer? All right, I'm gonna go ahead and pick on my cousin Jody. Let's go.
Sorry guys, I'm here. My stock is Maxar, MAXR. I chose this stock because I was kind of voluntold by my father to invest in this a couple months back. But through my research, when I invested in them in August of last year, they were at about $23 per share. As of today, they're at $43 per share. So they had a $20, they had a $20 jump in stock over the past, like, what is that, 6 months? And so overall, I'm really pleased with that purchase.
Yeah, I think
Overall,
so. About one that's trying to do the
this is a company that they provide Earth intelligence and space infrastructure solutions for the US and internationally. And so they kind of do a lot of stuff that I don't quite understand, but basically they provide like robotics and subsystems and so much more. And they were founded in 1969. They have a lot of like government agency contracts, and so they do a lot of different things, and they're like a part of a program that's sending the first woman and the next man into space in 2024. I also read an article that they are also doing some things so that we can actually go to Mars. And so, yeah, that's my stock.
All right, Jody, great job. Let's give props again, guys. All right. So next up, I'm sorry that I'm picking on my family first, but Aunt Shirley, are you ready? Auntie, it's okay if you're not. Let me see. We'll move on to, let me see. Let's go with Mr. Jordan.
Hey all, how you doing this evening? Can you guys hear me okay?
Yes, we can. Jordan, we can hear you.
You're muted now, Jordan.
Okay, can you guys hear me? Because it doesn't say that I'm muted. I'm muted.
We can hear you now.
Okay. So one of the stocks I picked is for this particular assignment is Ingersoll Rand. It's also known as IR on the New York Stock Exchange. So they've been established in making a lot of equipment commercially. So they make things like air compressors, pumps, all different kind of things for, servicing commercial buildings to commercial vehicles. I mean, they make tools that you'd work, to work on vehicles in trucking, airplanes, and they've been around for at least a century. Okay, and I just don't see them going anywhere. They have a strong reputation with excellent customer service and durability and reliability of the components that they manufacture. And they also, sorry about the background noise here. I'm over here by the airport. They just seem like a solid company. Today they were down a little bit. It shows, I think it was about 18 points or so. But I think it would be a good, one of these good long-term investment stocks where you're not really just trying to, throw it in for 5 or 10 years, but more like a 20 or 30 or even more. Because, they've been around for a long time and there's not really anyone that can really compare to their product quality. Their product quality. A lot of their stuff is designed to work in very harsh conditions, and they're known for their reliability and their they're really hard to match with their customer service, and their parts distribution networks for replacing or servicing their equipment is second to none. So that's a little bit why I picked Ingersoll Rand. I thought it would be a good stock to invest in long term. I just don't see anyone quite doing what they're doing as far as with the reputation they have. And it's just one of those slow and steady stocks, kind of like a Walmart, you know. So that's the one I chose. And I just really see, you know, I just really see them as a necessity worldwide as far as when it comes to, you know, repairing the different equipment. Even, you know, they make, like I said, they make tools, you know, automotive tools, you know, tools to work on planes, electric car. I mean, they make it all. You know, they make bobcats, they make forklifts. I mean, they make everything that's needed in manufacturing. They make all those different tools and equipment. So that's who I chose, and that's why.
Awesome job, Jordan. Great job. Let's give some reactions in the chat. And from what I remember you mentioning in previous classes, you work on cars, correct?
Correct.
So that's why that connection to these stocks is super, super vital. And this is going to help to create a diversified portfolio. So thank you so, so much, Jordan. Way to go.
Thank you for your time.
Yeah, absolutely. All right, next up, let's have Corey.
Hello, can you hear me?
Yes, we can.
Great, awesome. This is actually my first week I was invited by Miss Shirley. So yeah, but you know, no worries. You know, I did you know, just wanted to share a stock that I've been looking at that I think is a very good stock. And the stock that I have been looking at is Match. It's called Match Group. And Match Group actually owns, it has the largest group of online dating. And so online, so with the pandemic and everything, I feel like that's been a huge segment that has just grown. And just looking at Match Group stock from last year up until this year, it has almost doubled. You know, last year, February 20, I think their stock was around $60. Today, they're at 152. And just looking at the revenue from last year to this year, it's grown 19%. So they're still growing at a great rate. And they own Tinder, Hinge, Match.com, a lot of the majority of the dating apps nowadays. And I think just with the world, the way things are going, more people are going to be looking to date online and find love online. And so that's I see a huge part of our life. And so, yeah, I think Match Group, and the only really the big competitor is Bumble. And Bumble recently just joined just recently had their IPO. And so they're going to be, interesting to look at as well. But I think Match Group is going to be a great stock to look at just for the future, and just kind of looking at how people are changing their habits and doing, dating. I think Match Group is definitely going to be able to take advantage. And then just looking at the market of online dating, it's projected to grow to $10 billion by 2027. So, there's a lot of growth there in that market, in that industry. So, yeah, I think Match Group is, going to be around for a long time. And so, yeah.
Now, come on now, Corey. No, you didn't just join us and blow us out the water. Welcome to the family. That was awesome. My sister and I were like, that's dope. We didn't know that they own so many of the dating apps. And you're right on. I'm assuming you're a millennial or I don't know,
Yeah.
you might Lindsay. Okay, yeah. So we all understand the dating apps. So that was awesome, Corey. Give him some props, y'all. First
Thank you.
class, and he, jumped right in with the initiative. Awesome job. Thank you so much.
Thank you. Thank you. Thank you guys for having me.
Yeah, yeah. Be proud of yourself. All right, let's go with Miss Deja.
Oh, hello, can you hear me?
Yes, ma'am, we can.
Okay. I was just saying this is my first class as well. So I'm just listening, taking notes. I know Corey kind of set a good example, making me look a little bad, but this is my first class as well.
Okay, and did I mispronounce your name? Is it Dasha?
It's Daisha.
Daisha. Okay, Daisha. Thank you so much. No, I'd be right there with you if it was my first class. So we're so glad you're a part of the family, and we hope that you come back and join us. Thank you so much.
Yeah, thank you.
So next up, let's go with Jennifer.
All right. Hello, everybody.
Hello.
Okay. So this is my first stock ever purchasing. Well, I haven't even purchased it yet, but it's my first time looking into it. I was told to kind of just look for things that I use, just things that I purchase and do. And so I looked at Amazon was my first choice. I recognize that Amazon is like $3,000 per stock, and the dividend yield was like 0%. So I said, okay, let me try something else. And I looked up Apple, which I've used Apple products. I use the Mac products, but the Apple phone is what is generating sales. It looks like in the last year, the sales have been on a rise for the Apple phone. I think they kind of went over and above Androids. So I think they took a little dive recently, but the sales are still going up for the phones. I know the cost of the stock is $121, and it has like a dividend yield of like 0.8%. So.
All right, Jennifer, thank you so much. I know it's a controversial topic, Android versus Apple, but I'm team Apple all day, every day. So thank you for you too. Thank you for sharing that information with us. We appreciate you.
You're welcome.
Let's give her some responses and reactions, guys. All right. I don't know your name, but I'm just gonna go by the name that I see. Cool Cow.
I'm still working on it, trying to make sure I got everything together.
Okay, great. How would you like me to refer to you?
Well, my name is Calvin, but
okay.
Cool Cow sounds better.
Okay. Hey, I'm here for it. We all need pseudo names. I'm here for it. All right, Cool Cow. Do you want me to call on you later, or do you want to just continue to listen?
I'm gonna continue to listen because I want to make sure I don't want to sound like a fool speaking on stuff I'm still learning about. So.
Oh, you can't be. You're not a fool, but I absolutely understand. Yes, sir. Thank you for joining us.
Thank you.
All right. The next name that I see, and I don't think I'm going to say this correctly. Charnay. Is it Charnay?
Hello.
Hello. Hi.
Hi. You did say it right, but I'm right with Dash. We joined together, so I'm just listening and taking notes too.
Okay, perfect. Thank y'all for joining. Here for it.
Thanks for having us.
Yeah, absolutely. All right. The next one that I see is Shelly. It's okay. I'm probably saying your name very wrong, and it's okay if you don't have anything prepared. I'm gonna double check to make sure I didn't go miss anybody. I actually have one that I will briefly talk about. Let me pull it up real quick. Give me 1 second. Okay, I decided to do CRISPR Therapeutics, and they are a company that was founded in 2013. They are a Swiss American biotechnology company. And actually, CRISPR is just an acronym, I believe, in the biotech field, and it stands for clustered, regularly interspaced, short. I'm pretty sure I'm going to say this wrong. Palindromic repeats. That's what CRISPR stands for. And so the CRISPR Therapeutics company, they were founded in 2013, like I said, and they are currently developing many drugs that treat rare diseases. The two founders received a Nobel Peace Prize last year in 2020. And their mission says that we are focused on developing transformative gene-based medicines for serious human diseases. So they are on the sorry if you heard that. They are on the cusp of some groundbreaking medical drugs that are really needed for diseases that need cures. And so it's an exciting endeavor. And as you can see, their stock is currently worth $125.63. They went public in 2016. And this is just the graph over the 6 months. The year to date has gone down a little bit. 1 year has gone up. We see a trend. And then the 5-year mark, we see that they have a steady trend going up. It's a very exciting company. Like my cousin Jody said, I don't know too much about the field, but I know that when I hear about drugs for rare diseases, I'm very intrigued on what that could help for the greater humanity. So that is all about my stock regarding CRISPR. Did I miss anybody before we turn it over to Mr. Holmes? Okay. All right, Mr. Holmes, we're going to turn it back over to you.
My real name is Daddy.
I'm trying to keep it professional.
No, let's keep it real. So you address me by my real name, then I'll start talking. I'm waiting.
Oops, my bad. We're going to turn it over to Daddy.
Thank you. Thank you. Hi, everybody. Man. Boy, I tell you, you guys really make me proud. Man, everybody give yourself a hand. That was good. That was really good. Everybody, that was really good. Man, you guys know you did a good job. But see, that's my point, is we have so much Black magic. We have so much. All we have to do is decide what we're going to focus on, because whatever we decide we're going to focus on, y'all, we're going to kill it. We are. Whatever we decide to focus on, we are going to kill it. We are. And I mean, you guys really, you guys haven't, this is your first time more or less pretty much kind of doing this. Personally, I think you're already killing it. I really do. I really do. There's not a single one of these that I would be afraid to invest money in. So the way that we're going to do the portfolio is, first of all, Kelvin, did you want to say anything, or do you want me to keep going? It's up to you, Kelvin. It's your option. Before I go and get one. Okay, well, I don't hear anything, so I'm assuming that I can move forward. Okay, so it looks like you guys, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 total. You know what? I'll just say a little something about each one. Tasia, oh my God, was this like her second week? Oh, killing it, killing it. So you guys, she was referred to me by Al Flowers, and I told her straight up. I said, you know, we're kind of a little far along in this class, and I don't know how difficult it may be kind of difficult to catch up. And I kind of hit her in between the eyes. I said, our platform is not for lazy learners. She's like, I'm not a lazy learner. And I'm like, young queen, you are not a lazy learner. Young queen, you are just, you're awesome. So she's got
Thank
some
you.
she's got some business stuff we're going to be working on. And I feel confident. I feel confident that her business is going to rock. I mean, if this is any kind of indication, I like your idea. My wife and daughter both picked the same company. That's cool. That is really cool. And they didn't know. And see, at least that's why you got to go first. But the cool thing about it is I love both presentations. And I like the fact that Angelica did not, at least if she was frazzled, she didn't show it. She still went ahead with her presentations. And that's really the way you got to do it, because her presentation was a little different than Kim anyway. And when you take both and you put them together, I'm like, that's a nice presentation. It really is. I'm not kidding you guys. I'm not just saying that. And you guys know I like Square anyway. So you guys, I mean, you guys sold it. You really did. The cool thing about it is, remember, when it's all said and done, you guys, we're just trying to make it plain. Okay, we're trying to make it plain. We're taking this stuff that they try to confuse you with, and we make it so that it's understandable. And you guys did a great job of that. Cora, this company you outlined, I didn't really know about it. And that's the cool thing about it, is because it's not realistic to know about every single company. And before, that's why I told you guys, start with like a universe, you know, like maybe a 20 stock universe. I don't mean 20 stocks that you have to invest in, but 20 that you're studying, that you're researching, and so forth. And while you were talking, Cora, I got 2 computers here and 3 phones. So I was checking it out. And the technical charts look pretty good. Nice little support areas. It's got, and I know I don't want to dive down that rabbit hole too far, because the technical stuff can sometimes run some people away. But any of you guys that hang around me, you know that particular type of chart of that particular stock is favorable to my taste, okay, to my taste. So that's really cool. I think it's a great idea. My cousin LaWan, close to my heart. Girl, you was cheating. You know that ETF that's probably my favorite ETF, RK. You was cheating, girl. Cousin, great job. Zed, oh man. My son-in-law coming strong. He's so quiet. You don't really know if he's like actually, you know, really working on this stuff or not. And I remind him, I'm like, hey, you know, we got our stock presentations coming up. And he just goes, I'll be ready. Son, you was ready. You was ready. Disney, that was solid. That was solid. That was very solid. Disney is a solid company. And he's absolutely right. If you can take a company that makes its money with people in crowded places, and then you take that away for a year, and it's still surviving and it's still strong? Oh man, wait till COVID is done. They're really gonna kill it because people got cabin fever anyway. Shoot, son, that's definitely gonna be in the portfolio, no doubt about it. Jody, I like this one. You must have got that from Pat. Okay, all right, Pat Adams. I hear you, Pat Adams. And that's another one kind of like Chorus that I didn't know about, but I like it. I like it. Great job, Jody. Great job. And tell Pat I said, hey, all right, I like it. Jordan, look at it. You did it, man. You did it. And I know he's probably like, oh, I've never done this before. Oh, man, Ingersoll Rand used to own Thermo King. And Thermo King has fed a lot of people on this platform, okay? So that is the reason why, you know, I've never been hungry in my life. I've never been hungry in my life because my father worked for Thermo King for 31 years. And so Ingersoll Rand used to actually own them. And so that's kind of sentimental, but he's right. Ingersoll Rand is going nowhere, nowhere, too big to fail. You're absolutely right on that, Jordan. Solid. See, this is my point, you guys. I mean, they make it seem so complicated. Look at it. When you just, okay, let's think what makes sense. And I'll tell you something, the great Peter Lynch, he's written several books. Remember, he used to be the legendary fund manager of Fidelity Magellan. The great Peter Lynch, this is what he said, he said that actually a lot of people don't realize it, but sometimes they really have an advantage over the professionals, okay? Because what these hedge fund managers have to do is they have to depend on sending some analyst out to the company and gathering whatever information they can gather. Okay, think about it this way. Let's just say you got, I don't know, somebody you just met a little while ago, and they're coming over to your house to visit, okay? Now, when they come over to your house to visit, is it safe to say that you guys probably clean that house 2 times? You probably clean it 2 times. You probably double, you triple check because you wanted to just show your absolute best. But if we're real about it, whatever is the condition of that house, even if you're a neat freak like my wife, I mean, it shouldn't be exactly the same as when you have announced guests coming. So think about that. Let's just say one of these big hedge funds, they're sending somebody out to a meeting with the analysts and the corporate executives. Do you not think that that company is going to put their best foot forward? They're going to just try to like shine and look the best that they can, okay? And that's what the analysts get. They only get the best sides of every company. And so Jordan, for example, you know about this kind of stuff because you work in this kind of stuff. So you know what's a jacked up company and what's a company that's like really on top of things. That's what I'm talking about, guys. Excellent, outstanding. Corey, oh my goodness gracious. Oh my, wow. Woo! I can't wait to meet you, man. My sister called me, I think it was yesterday. If I'm wrong, it's either a day or 2 ago, and told me that she gave you the link and for you to come on and said you just graduated from college not that long ago and wanted to get involved. And I was telling her, I'm like, wow, he kind of sounds like a couple of our young stars, you know, like Rod and Todd. And she goes, yeah, pretty much. I'm like, well, those guys are they're doing great and they're gonna do great. So that speaks well for you, my man. The first time coming strong like that? Oh my goodness. Wow. I don't know your exact age. I think somebody said somewhere around 25. Let me see. I started with Merrill Lynch when I was, I think, 30. Yeah, somewhere around there, 30. Right, because I don't think Dee Dee had been born yet. Man, you could go and you could work for an investment firm right now, and I promise you, you're better than most of those jokers there. I'm not even joking, man, because most of them are just, silver spoons. Mom and daddy sent them to Princeton or Yale, but when it comes down to the rubber meets the road, don't get intimidated. Don't get intimidated. And that's why this is so cool, because I told you guys, I told y'all, they ain't got nothing on y'all, nothing. And you'll see when we put your portfolios up against theirs, and you guys are just getting started. Wait till you get a little seasoning and experience. Y'all gonna be dangerous in a good kind of way. You guys are gonna be dangerous. That's really what we're after. And Dee Dee, well, no, Jennifer, Apple, you can't go wrong. And you were fine with Amazon. I know you probably got thrown off a little bit about the dividend thing, but here I'll explain that. Is that your growth companies and you have the dividend companies. So a lot of times when companies get bigger and they can't really grow that much more and they're well established, then they'll start paying dividends as a way to continue to attract investors. Okay. Like 3M, they pay a dividend, Boeing, they pay a dividend, and the big, well-established companies like that. Now, when they're still growing fast, they generally elect not to pay a dividend. They take that money, but they would have paid a dividend, reinvest it back in the company so that they can continue to grow faster. So that's what Amazon's been doing. So I hope that didn't throw you off, but either way, you can't lose. I mean, a blind squirrel can throw a nut at Amazon and Apple, and you're gonna make money. You are. I mean, and you guys see them every day. You see what they're doing every day. And in the end, that's really what it is anyway. Because when you're buying stocks, you're buying a little piece of those companies, and you can see the companies are doing well. Look how much, you guys, you use your little iPhones, you little iPhone people out there. I'm sorry, I just have to take that swipe because I'm like in a minority in my family. My wife's iPhone, my kids are iPhone, so I get surrounded by iPhones. But even though I don't use an iPhone, I'm not stupid. Okay, I know that Apple is killing it. They're going nowhere. So that's a good call there, Jennifer. And you know what? That's going back to your instincts. That's going back to your instincts. Dee Dee cheated. She knows I love Christopher. You cheated, Dee Dee. But at the same time, I'm just saying it. I'm just talking. Okay, she didn't cheat. But the thing about that, I know she did her research. And she looked and she saw, some funds that were holding it. And she saw that Kathy Woods had CRISPR in her top 5 holdings and so forth. So she did the research. And yeah, I'm definitely gonna rock with that. As a matter of fact, I liked all you guys' picks, and I'm not just saying that. I promise you, because my family will tell you that I'm not a participation trophy kind of guy. Sometimes people get mad at me, but there's no point in me faking it. Cool Cat, you got your hand up. Hey, you want to say something? Let them say something.
Yeah, so I'm not good at the public speaking part, but I'm starting to learn.
We're not worried about that, brother. We're not worried about that. We just want to know if you have an opinion. If you got one, great. If you don't, that's cool too.
I was looking at some that's JKS called Jinko Solar Power Holdings. Basically, I think that's the new wave of what's going on, like with power going out in Texas and different things of that nature. I think solar power is going to be on the rise. So I had been looking at this company called Jinko Solar Holdings, company, and
Okay.
they have some decent holdings, and I've seen that they are really doing some big things in their company. So that's kind of my thoughts. I want to put something in there to not say that I didn't participate.
No, no, no. We wouldn't think that at all. I'm actually looking at the report on it right now, and it looks like it's selling right now for a little over $46. The fundamentals actually look pretty decent. The earning per shares is awesome. $3 earning per share. The PE ratio is 15, which basically what that means is that it's a value stock. Because if it's got a P of 15, because if you pull up, say, like Tesla's earning per share, let's see if I can pull up. You can see it's like sky high. Let me see if I can pull that up real quick, unless Didi beats me to it. Just to show you. Tesla's earnings per share ratio is boom, 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 boom. Hang on.
But when you agree that solar power is going to be very valuable to a lot of people?
That's solid. That's solid, bro. But what I'm telling you is that their earning per share, wow, it's like, whew, way better than like Tesla's. And that's the fact that Tesla has a high EPS. What happens when a company has a high EPS, you just have to look further. The reason why Tesla's EPS is so high is that people are basically, the stock market is a photo of the future. It's the photo of the future. And so the investors are viewing Tesla like it is going to hit those high numbers. So that's why it's high. But this company that he's talking about, the earnings per share is already not that high. So the point there is that I think Tesla's EPS might be about 125 or something like that. And then we'll get it exactly later.
So the supercharger one built the one we need now.
What's that?
Then it'll be good because then we have two brand new
belts.
Jordan, you might want to mute yours.
Yeah,
Jordan.
you have to use like.
Okay, good.
I got it. Thank you. Sorry about that.
Cool. So the point there is with this company, and I'll do a little bit more digging about it. It looks like it's definitely a value stock. And what we mean by a value stock are stocks that their financials are solid. Because like sometimes you'll look at, okay, you guys remember all the big incident with GameStop and how it went from like, around $50 a share to like $400 a share, which was like just a crazy swing. And basically what happened was that the analysts would keep coming back and saying it makes no sense because it's not trading with the fundamentals. So in other words, when it got way up to, like 250, 300, 350, 400, you couldn't justify it by the earnings of the company, by their financials. Whereas this company that Kelvin is talking about, you can justify it with the earnings. Where it's trading at and where the earnings are is very solid, very solid. So great job, Kelvin. Great job. Great job. So I think that makes 12. I'm sorry, is anybody saying something? Somebody saying something?
I said thank you.
So that's 12. 1, 2, 3, 5, 7. Okay. Give yourself a hand again. Again. This is excellent. Excellent. You guys make my heart dance. You really do. You make my heart dance. I'll tell you, I think the average person, my wife would know because she is a teacher, professor. But the average person, I don't think would know the time that goes into this course, just the curriculum, the preparation, all of that. I think the average person would not have a clue. It's very time consuming. And I'm not gonna sit here in front. It kind of can wear me down a little bit sometimes, but I know I'm doing the right thing. And when you guys show up and show out like this, it further indicates that we are on the right track. I mean, it further indicates that we are on the right track. So without further, anybody have any questions before we go on break? Any questions? Okay.
I don't have any.
Okay, no questions. All right, so we're gonna go on a 15-minute break. And when we come back from that break, what we're gonna do is we're going to go with what I call 10-piece hack portfolios. We're gonna do two 10-piece hack portfolios. And what I mean by that is, let's say you got $1,000. You just want to put it in something and you don't want to spend a lot of time. You just want to put it in something and just go back and look at it a year or two later. Remember last week we did the one, I think it was only had like 5 parts. Okay, so that was really, 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 really just a real short hack. This was not going to be a sophisticated portfolio or anything like that, but it's just going to be a 10-piece hack. What do you do with $100, $1,000, whatever? We can divide it up in tenths, and you just want to put it away and just not even worry about it for a while and be quite confident that it's going to do pretty well for you. So we're going to have one that's a moderate portfolio and one that's an aggressive portfolio. So just depending on your risk tolerance. Not going to spend a lot of time on that because we have other things to do too. And then also, I'm going to roll out your portfolio. So in other words, of all you guys' presentations, what I'm going to do is, while you guys are on break, I'm going to put that into a real portfolio, and we're gonna add a little cryptocurrency to it too. So we're gonna add a little Bitcoin to it. But other than that, I'm gonna take your picks, and then we'll go back and we'll see that portfolio consistently. And I mean, we'll see it, for the remainder of the class. Like I said, we're not gonna get too excited in the short term, but in the long term, I mean, in other words, I'll probably just keep that $100 separate there because I'll have more classes. You guys are the prototype. You're the original class. I'll have more classes, and it will be documented what you guys chose. That will be documented what you chose. Okay. So without further ado, Didi, hit the music intermission, and we will be back in 15 minutes. Oh, one more thing. In addition to that, we're going to do another, we're just going to spend a little bit more time on the business plan. Just diving into that a little bit more, because when we kind of keep feeding you guys bits and pieces of this stuff, and this is already showing with the investments, but we're going to be doing that with the business plans because we're going to be feeding you guys bits of that really between here and the end. We're going to be focusing quite a bit on your businesses. And the reason for that is so that when you start yours, you're going to be comfortable. And if you already have one, you're going to be comfortable. You're not going to be intimidated. You're going to know what you need to do, and you're going to do it. And I'm sure, you guys will do it well. Okay? So we'll see you guys in 15 minutes.
Hey, James?
Yes.
I got cut off for about 5 minutes. Did I miss anything?
No, no, just me rambling.
Okay.
And I'll send you, the recording will be on YouTube anyway.
Okay. Awesome. Did you see last week that I sent you my phone number so we could talk t-shirts?
No, I didn't see your phone number. Can you text it to me tomorrow? Do you have time to talk tomorrow?
Yeah.
Okay, can you text it to me tomorrow? Because I was thinking about that. I want to talk to you. Now, I am out of town, but I at least like to start chatting about it.
Right. Yeah,
Okay.
I'll message you. I'll message you my
Okay.
phone number.
Well, you got my cell number.
Do I?
Yeah,
You know that I do.
I've gotten calls on myself from you. I mean, texts from myself before. But anyway, we'll work it out before we go tonight. I got to put together this portfolio.
Okay.
Okay, see you in a little bit.
All right.
Bye.
Break is over.
Welcome back, welcome back, welcome back. All right, y'all. Let's get this party back started. All right. Once again, excellent job. Excellent job, you guys. So this is how we're going to set up the Black Lion Masterclass portfolio, the one that you guys picked. We are going to take every pick. We're going to take every pick. So what we're going to do is we're just going to open we're going to open $100 Robinhood account in the morning when the market opens. And we're going to use every one of you guys' picks. So the way that that will work is there was 12 of you guys and 12 picks. There wasn't a bad one. There really wasn't a bad one in the group. You know, sometimes.
Jack, who's over here? Come here, Jack. You want some cookies?
Honey, can you mute your mic?
Sorry.
Thank you. Thank you. I said this a while ago, and the way I said it is that sometimes if we can just quiet ourselves and just listen, you know, and you can listen to whatever you call it. Some people just call it listening to their instincts, okay? I call it listening to my higher power, but whatever you call it, just quiet yourself and listen. You guys, I'm not just saying this. And if you listen to the interview, that's on our YouTube channel with Gary Hines, the managing director for Sounds of Blackness, he talks about the same thing, is that we have so much greatness woven into us in our DNA. We have it. All we have to do is to give it permission to come out. This is interesting. This is really interesting here. Okay, my son-in-law, Zed, he talked about Disney, which is a phenomenal company. We've talked about that before. But we were watching a Disney movie fairly recently. And I don't remember the exact name. My kids can tell me. But anyway, a lot of times what they do on some of these movies is that they will take things that are actually, in gray area type things, real things. Sometimes they'll take them and they'll present them to you, and you probably don't even know that. And it was one of these characters on Disney where basically it was a matter of that character just letting their greatness come out, just giving it permission to come out. What was the name of the one I'm talking about, Didi? Do you remember? Or at least somebody help me with that character. Oh, no, it was Mulan. Mulan, remember that? Mulan. I would have never, ever, and I hope that's Disney. I might be wrong, but I think it's Disney. But anyway, I would have never, ever watched this thing on my own. There's no way. No way I would have watched it on my own. But so in Mulan, they were talking about the chi. You know, everybody calls it something different or whatever. And this young lady, she had some greatness, inside her. And in Asia, they call it chi, or at least for these purposes, that's what they call it, was chi. And she was trying not to let it get out. She was trying to hide it. And a lot of it's for sexist reasons and stuff like that. And most societies are sexist anyway. Where the interesting thing about that is it's like, if a man has this chi, it's considered a great thing, But if a woman has this chi, well, no, she needs to suppress it. She needs to suppress it. Why? I don't know. Maybe because she outshine her husband or whatever. I think that any man would be lucky if they have a wife that, whatever they say is outshining them or whatever. I mean, you could easily say that about my wife. Do I have any issues with that? No. I'm not stupid. No, I don't. I think it's great. But anyway, getting back to that, it was kind of like an analogy, where this young lady had to literally just let it out. And I'm not exaggerating. I mean that, you guys. That's a lot of what we do. I mean, between just letting out the inner greatness that we have and putting in the work. Okay, because if we do both of those, we cannot be stopped. Period. Did I say period? We do both of those, we cannot be stopped. Moving on. I say all this to say this. So like, a few of you guys at companies I hadn't really heard of, whatever. Okay, so generally while you're talking, I was looking them up and I'm like, okay, cool, solid. Everything was solid. And then Calvin's, I didn't have much time because it was like right at the end. So I didn't really have much time to go in and look at it. And so during break, I started pulling it up and I was like, holy cow. And I'm like, I have no idea how this brother stumbled on this company. I have no idea. I know Kelvin has some chi. I do know that. Or Holy Spirit, whatever you want to call it, okay? I know he has that. And I don't know if he had that working with him on this or not. But let me tell you a little bit about that company, JKS. And if you talk about value stocks, that's like a value stock that's waving its hands. I could see early on that the financials look good. And what I mean by that is, irregardless of what it's trading at, if it went bankrupt tomorrow, the financials look good. They are what they are. The books are what they are. But there's a thing, it's called intrinsic value. And most stocks trade higher than their intrinsic value. Most of them trade higher than their intrinsic value. This particular stock is trading lower than its intrinsic value. The intrinsic value of this stock is about 109, and the stock is trading for around 46. I'm like, I don't even have to think about that one real hard. Good job. So what we're gonna do is we're gonna invest in each one of you guys' company, just a small amount. So we got $100 to put in this account. So we're gonna put $5 in each stock and $5 in the ETF, Lawan. And so there was one stock that came up twice by Kim and Elise Square. And so what we're gonna do is we're just gonna put $5 times 2 in squares. So if you like it that much, we're gonna put a little bit more in that. So that's gonna total $60. And then we're gonna wrap that with $20 of Bitcoin, assuming I have no objections. If we have any objections to adding $20 to your class portfolio, say it now or forever hold your peace. All right. As they would say in my frat meetings, approve with the proper alpha sign, or how about approve with the proper black lion sign? All right, so I don't hear any objections. Can you guys hear me? Okay, I'm assuming you can. So anyway.
I can.
Yes.
Okay, great. So it's gonna be $60 worth of your picks and $20 of Bitcoin. And then we're gonna leave $20 not invested right now. So when you hear these people talking on CNBC and these analysts and whatever, they call it cash, okay? So we're gonna keep $20 in cash. The reason why we're gonna keep $20 in cash is that it's pretty clear that the market continues to break new highs regularly, all right? So what goes up must come down, what comes down must go up, okay? You guys know that the market does not go like this, it goes like this, okay? So we know that. And it's breaking new highs all the time. So at some point, there will be some type of decline. Depending, and you can define it however you want. We can call it profit taking. We can call it a correction. We can call it a bubble. You know, some people call it a crash. I don't even really like using that word because, you know, I think it's, you know, I don't know, too dramatic. But anyway, so the market will dip then. So we're going to use the last $20 to invest on dips. So if we get, you know, a 10 or 15% drop on a dip, or if we get something, yeah. And I think the only fair thing is to just invest in some of the holdings that we already have. Because, I mean, it would be easy to just go, well, gee whiz, Google just went on sale. Let's buy some of that. I mean, you guys didn't pick Google, so I'm not going to do that. But if there is a, you know, a pretty good size correction or dip in the market, we still have that, because I'll tell you, it's a bad feeling. Even if you're invested and you're fully invested and you don't have anything sitting aside, sometimes they call it a rainy day fund, in case a great opportunity comes by you. I mean, that's why, like, you know, the people like Warren Buffett always has a good amount on the side for those rainy days. And that's how the real rich get rich. That's how they get rich, is they're sitting there and they're waiting. They're waiting on things to go down, because when they go down and everybody's selling, they're going buy, 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 buy. JP Morgan, I mean, you guys read your history. I know you, JP Morgan, a lot of those guys back then, Rockefeller and all those guys, that's how they really, their riches became exponential during bad times. So during bad times, the wealthy get wealthier. They do. So even us non-wealthy people, it's still a good idea to keep a little bit aside so that we can take advantages of some opportunities. I mean, what if Bitcoin goes down to 30, which I doubt that it'd go to 30 at this point. But what if it did? Wouldn't it be nice to know we're looking at it, we don't see anything fundamentally wrong, we feel confident that it's still going to hit the numbers that we talked, which we talked about it being easily over 100 by the end of the year. So wouldn't it be nice to pick up some more of that if it like went way down? So we'll see. We're gonna so that's the plan. Is everybody cool with that plan? We're cool with that plan?
I like
Great.
it.
Yes.
Okay, good deal. And that'll be public for us. It's no secret. And another reason is that it's easy for people just to pop off and like, oh yeah, you should invest in this, and you should invest in this, and if I would have done that, I would have done this, and blah, 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 blah. This is on record. This is on record. This is on record, and it's transparent, okay? So everybody can see. Let's move forward. So let's go with our hacks. Couple hacks here. We have a conservative hack. I'm sorry, not conservative. There's nothing we do that's conservative. Remember, we're behind in the race, okay? So we got to run a little harder. We don't have the luxury of being conservative. So we have a moderate hack and we have an aggressive hack. So what I've done on these is I've taken, you know, the same $100 and just split it up. Showed you guys how we would split it up. So anyway, the way we would do that is let's go with the we'll go with the moderate hack first. Okay, this is the moderate hack. Let's make sure we got the right number there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Boom. All right. So the moderate hack we have. we're starting all our hacks with crypto. Okay. So we're gonna go. We got $100 to work with. Okay. Now let's just say 1,000. That just sounds better. Okay, the vision is all the same, 100,000, whatever. So So you're gonna put $100 into Bitcoin, $100 into Ethereum. We're gonna put $100 into ARK-K. We're gonna put $100 into the ETF QQQ. We're gonna put 100 in IVRA ETF. Okay, so those are our ETFs. So we got 20 in crypto, 20 in ETFs, and then we're gonna put another $30 into stock. So we're gonna put $100 into CRISPR, 100 into Tesla, and 100 into Pfizer. And we're gonna keep 200 in cash to be used later to buy in a dip. So once again, that's 20% in crypto, 30% in ETFs, 30% in stocks, and 20% in cash. That is our moderate hack. Now, the aggressive hack. The aggressive hack, we're starting the same way. We're going $100 into Bitcoin, $100 into Ethereum. We're going, and so that's our crypto, 20% crypto, which even in on my personal account, I got like 50% in crypto. So this is actually not even super aggressive actually, but you know, it's fairly aggressive. Super aggressive would be, you know, all of it in Bitcoin. And you guys know I will never do that because that violates one of the most basic rules of investing, and that is diversity. So I would never do that. We're gonna put, okay, on the stocks, 100 in CRISPR, 100 in Tesla, 100 in Riot blockchain, which just killed them today. So I might be like a day late on that. Oh my, I have Riot blockchain right now, and it was up, I don't know, like 34% today in one day. I did post on Instagram and I posted on Facebook. And the post just said today was a good day. I have personally 36 positions that I'm long just in ETFs, crypto, and stocks. And of the 36 long positions that I have, 33 of them were up. And I'm like, it's a good day. Almost like that song by Ice Cube, it's a good day. Every day is not like that. I know that. I know it. Reality could hit as soon as tomorrow. But you know what? When we get the good ones, let's just, you know, celebrate. You know, let's celebrate ourselves. So an aggressive, okay, we got the stocks. And then the ETFs, we have okay, we got MSTR, MicroStrategies. We've talked about that before. We got ARK-K and ARK-G. ARK-G is the genome. So that's 30% in ETFs. And in this one, we only have 10% in cash, which is one of the reasons why this would be considered aggressive, because we don't have that much in cash in case things go south on us. So with this aggressive portfolio, we're just holding. We're investing and holding. So and that's okay, because literally I could invest that last 10% that's in cash now on something and just hold through the dips. That's fine, because we let this sit for 3 years. We're going to be in real good shape.
James, what was that last one? What was the last ETF?
ARK-G, genome.
Okay, thank you.
So anyway, so I call that the 10-piece hacks, just 10-piece hacks. Literally, I mean, this is not investment advice. It's educational purposes. But I'll say, for example, if somebody just went and did that, okay, they probably do pretty well, and there's not a whole lot of thinking involved. It's like a template already done for them. You know, I already put the work in, and it wasn't something that I just pulled up on a computer and in 30 seconds made a decision. There's hours and hours and hours and hours of research into things that some of this got to be slightly sophisticated, and I've reduced it to just that. What if you had $100 and you want to be aggressive? Boom, do this. What if you had $100 and you want to be moderate but still get good returns? Boom. All right, moving on. Any questions? No questions.
Yeah, where are you keeping the cash?
Oh, like say, for example, when we set your fund up tomorrow, the $100 in Robinhood, literally we will drop $100 into Robinhood. Okay, we'll drop $100 in Robinhood. We'll put $5 in each one of your picks and $20 in Bitcoin. So that means that there's $20 left. So that's what we call cash. It's the amount that's not invested. Does that make sense?
I
Yes.
missed one of the 10 stocks that you just listed out.
Okay, I'll do it again. That was the aggressive portfolio. It's,
Correct.
well, what I call it is the aggressive hack, because a real portfolio has, you know, could have, you know, 60 to 100 different things in it, a real one. So I call this a 10-piece hack, is what I call it. In other words, if you just, you're not trying to be Kathy Woods, okay? You don't have a staff of paid analysts to go out and research all of this stuff. And you got to go work every day and all that type of stuff. You still want to make good money, but you don't have a lot of time to put into it. So that's why I call it a 10-piece hack, because you put the equal amount into each. So on the aggressive hack, we want, if we had $1,000, $100 into Bitcoin, $100 into Ethereum, $100 into CRISPR, $100 into Tesla, $100 into Tilray. How did I forget that last time? That crazy cannabis stock. $100 into Riot blockchain. And then we get to the ETFs, MSTR, MicroStrategies, $100 into that, $100 into ARK-K, and $100 into ARK-G. And then you should have $100 left in cash. And so if you want to take and you want to translate this into a $100 portfolio instead of 1,000, then it's real easy. Instead of 100 each, you just put 10 each. All right, questions? We good? All right, let's move on. Enough talk about making money today. All right, so let's talk about business plans for a little while, and we don't even have that much time, but let's go ahead and try to at least, I wanna hit it again, because I really, and I can see that with the investment stuff, because we've actually been hitting that fairly regularly. When you guys first started, I think some of you guys were like deer in the headlights, Jennifer. But you guys are getting a little bit more comfortable. And that's kind of the point, is that the more time you spend with it, the more your comfort level increases. And so on these business plans, we're going to be spending some time on this. And if it's too boring for you guys, I'm just going to let you know right now. If you want to check out, we're not offended, but it's important. It's important. I'll say it one more time. These business plans are important because they are our roadmaps for where we're going. And so we talked about the thought that you put into it last time, okay? So anyway, let's go ahead and Dee, do you want to pull up any of those business plan slides? So today I was just going to show you some examples from Black Lion Auto. Last time I think we talked a little bit about part of the business plan with Black Lion Foundation. But with Black Lion Auto, the executive summary and that type of stuff, I think you guys already got a pretty good idea of that. It's just me and Kim, really. And that was open October 4th, 2019 as an S Corp. And from our previous session, you heard my wife very eloquently explain why we like S Corps. So that part is really, to me, one of the easier things, the executive summary. And also, the mission statement shouldn't be that hard. It really shouldn't be. Your mission statement, you are summing up where you're going, what your mission is, what you're doing in a couple paragraphs. So the one that really, I think, starts to throw people is when you start getting into the meat of it, because a lot of times it'll just look like, it'll look like an MBA project or something, that's a master's degree project or high level junior or senior in college type project. But don't let any of that fool you, because the business summary, in essence, really is still talking about what you're doing. Is just from a business perspective. Okay. For example, here's one of the things that was written into Black Lion Auto in the business summary, and this is in the key measurements tabs. Also, I would encourage you guys on your own time, just Google business plan templates and just look through several of those. You will see a lot of common themes. And then also, that should impress upon you the fact that, yes, there are a lot of things that are common in most business plans, but in the end, it's the way you want to do it. No one can grade your business plan. So as far as, what type of sophistication does it have and that type of stuff. So anyway, key measurements, this is what we wrote. We wrote that pre-owned vehicles in 2019 are trending to be the strongest part of the market from a retail sales perspective. It's driving the finance growth, certainly driving the profitability of dealers and producing strong vehicle values that are helping residuals and keeping the used car market strong for the upcoming quarters. So basically what I was saying there is that more and more people are going to be buying used cars, and that was true. And then COVID hit. So did COVID make that not true? Nope. COVID made that more true.
More true.
Yes, it made it more true. You agree with me, huh, Jordan? Huh?
The market's hot. The market's hot right now. Hotter than it's been in a long time.
On used cars.
Yeah.
Used cars. Right. So that's what I'm saying. So that was on point. And that was written in October 2019. So a year and a half ago it was written, and you've had all types of crazy things that happened, and that is still accurate. Okay. Research shows that consumers in this industry primarily focus on the following factors. Now, this is what I call my macro research. What I mean by that is just the big picture of kind of what's going on out there. And whatever business you're in, a lot of times you guys already know. And if you don't already know, then just put in a little work and you'll see it'll come to you. So this is what I wrote. Research shows that consumers in this industry primarily focus on the following factors when making purchasing decisions. Boom. Expected reliability, exterior styling. If there's any of these you guys disagree with, let me know, okay? a lot of you guys out there, I put you in your vehicle, so I know how you think about cars. Previous brand, what did you buy previous brand experience? You know, what did you buy previously? Was it something you were happy with, or was it something that you didn't like? That's gonna affect your choice. Reputation and reviews. Next, ride and handling. Price, payment, and the safety, and then fuel economy. Anybody disagree with any of those? So that was written, like I said, in October of 2019, and it is still true. None of that has changed at all. Last paragraph of this section. And all you guys have to do is think about what you're doing and, okay, what makes sense. You know, make sure you know the market as a whole, and then what solutions do you bring to the market? See, it's not that complicated. What is in the market? What does the market seem to be asking for? And how can you, what you do, fill that? And you guys can go and you can look at YouTube, Instagram, or just read Google or books or whatever, and it's still going to come right back to that. What's out there that the market needs or can use, and how can you help fill it? This is what Black Line Auto does. We market to most social, economic, and ethnic groups, but find our natural market encompasses many people of color. Oh, you guys know that's what I do. I don't turn anybody away. I don't care what color you are. I don't care if you're purple, green. I really don't seriously care. Those that know me know that. But we do, if you're gonna say that we have a certain niche, I spend more time than I always have with really young people. I've helped so many young Black ladies when I was working for all the major brands, Maury's and Luther and so forth. On the side, I was counseling many of them. Statistically, people of color have been charged higher prices, rates, and fees by the auto industry. Black Line Auto is committed to bringing competitive deals and rates to all of our market, including the underserved. Somebody tell me what's Black Line's model? Somebody. I'm gonna stay here all night till somebody tell me that. What's Black Line's model? It's almost any Black Line thing. It's at the bottom. Under Black Line is our model. I'm just gonna wait till somebody tells me. I don't care if it's all night.
Financial voice of the underserved.
Yeah, that's right. Financial voice of the underserved. That's been our deal from day one. Day one. That's the weird thing about me, is I'm talking finances and financial literacy to the underserved. And I will tell you the reason why I have that whole market is because everybody else is talking to the people with the money. Think about it. I don't have a lot of competition in that market because there's not that many people talking to the people that I am working with and helping. Business goals and objective. We have the short term and long term, and I'm not going to go into that now because of time constraints, but I will say this, is that literally we had them broken down by year. In other words, I had short term and long term, and literally I had a 5-year growth strategy stage. Now I'll just give you a little example of it. The first stage was the last 3 months, and that started in November of 2019. And the things listed in that was to get the business incorporated, write some blogs. And if you guys go to our site, you'll see there's blogs both on Black Lion Auto and Black Lion Foundation. And those blogs are actually financial literacy blogs. The financial literacy blogs, credit, and things like that we still talk about. Open business bank account, register with our dealer's license, get our software set up, get our warranty companies going, and all of that was done. As well as securing our zoning and coordinating our broker contracts. What I mean by broker contracts is that we only carry so many vehicles. After COVID, we really don't even carry that many physically anymore. But I still have access to thousands of vehicles. I have direct 15-minute access to about 110. So if you go to blacklionauto.com, you'll see 110 vehicles on there. We have contractual rights to those. They're, parked at different places and so forth. But any of those vehicles we can get within 15 minutes, we can sell them, do whatever we want to do with those. In addition to that, I have broker deals set up with pretty much most of the major dealerships. For example, remember Black Lion Auto is an independent used car dealership, right? So that's what we don't have any new cars. So if somebody wants a new car, what do? I have broker deals set up with the major dealerships. The way that works is that it's actually a great deal for our clients because they don't pay for it at all. The dealership pays it. Can you believe that? The dealership actually pays for my service. So client literally tells me what they want. Oh, I want a brand. Okay, Didi and Zeb call me and say, Daddy. And I said, yes. They said, we want a new Toyota Highlander. And I'm like, okay, let's go get you one. And they told me what they wanted on it, all that type of stuff. That's all they had to do. I'm not lying. That's my daughter. That's my son-in-law. That's all they had to do, because from there, it's on me. So literally what I do is I do all the shopping of all the dealerships, get the best deal. The financing, I do all of that for them too. So literally, when they sent the finance contract to Didi and Zed, they didn't have to negotiate anything. I negotiated the rate. I negotiated the warranty pricing, everything. I'm not lying, and I know you guys think that can't be true. No, it's true. So I handle all that stuff because remember, that's what I do. I am actually a straight up expert in that field, straight up. I don't think there's, you can't count a whole lot of people in Minnesota that can maneuver that whole industry better than me. And I'm not trying to sound arrogant or not, I'm not really, but that's my lane. That's my lane in all regards to that, the financing and all of that. And so the dealers know that. And so they talk to me differently than they talk to you. You could go, any one of you guys could go to the same dealership, buy the same vehicle that I buy for you, and you're going to pay considerably more. It's like, that don't even seem right, does it? That's true. Because, and also, it's not even a fair fight. So, most of you guys buy a vehicle, I don't know, once every 4 or 5 years, something like that on average. Remember, the dealerships, they do this every day. And a lot of things that they have available to them regarding rate markup and all that, you guys have no idea. No idea. Well, I do, because I lived in that world for decades. And so they lose credibility if they try to lie to me. So my best dealers, we can almost do it on a handshake. Matter of fact, I was just talking to Gallagher, Mike Gallagher, the CEO of Luther. I'm not lying to you guys. Called me on my cell phone yesterday. I'm not the CEO. of Luther called me on my cell phone yesterday, just checking in, and we got to talking and so forth. And I was like, yeah, things are going great, blah, 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 blah. And then we talked about, because we're always looking at ideas in the future, things like that. And somehow the name Debbie Tufts came up. And I just told Mike, I said, man, Mike, I'm just going to tell you this off the record, is I love working with Debbie. Hey, George, can you meet yours again? It's like, I love working with Debbie, and Mike goes, she loves working with you too. Anyway, so Debbie Tufts is the general manager of Luther Toyota. And the cool thing about it, and some of you guys know that I just think women are just the greatest thing in the world. I really do. I just do. Some of you guys that really know me, and with 3 daughters, yeah, I'm a daddy's girl. What do they call it? Girl dad. 3 of them, and so I've been helping young ladies all my life. It seemed to be very natural. But Debbie, and I guess maybe that's why I gravitate to Kathy Woods, is because women generally, I'm not saying every woman, but generally, they just don't spend as much time lying to you as guys. I mean, I talk to men general managers all the time, and I'm just thinking to myself, you are insulting my intelligence. You are insulting my intelligence. So instead of just getting in a debate, I'll be like, okay, thank you very much, and hang up, call Debbie, I need this. And then she'll repeat it back to me, this. And of course, it's got to be a win-win. And she's like, done. I call her on the telephone, and I was like, can you ship this to my daughter, my son-in-law, and just take care of all of that? I didn't even have to be there. But anyway, didn't mean to go down that road too much, but there's a lot of years of building up trust and so forth in that industry. And so I spent all that time explaining why that was a part of the business plan. And some of you guys are ballers in what you do. Like Jennifer, Jennifer's a baller in what she does. And she's got some big things coming. And I know several of you guys do. Tasia, I feel real good about you, young lady. I think you're gonna kill it. This is recorded so that a couple years later, we're gonna come back when you guys are blowing up and he's gonna say, James said that about them back then.
Thank you.
Oh, absolutely. So anyway, we'll go through some of this other stuff later. Our 5-year plan is that when 5 years is up, to turn it into a major line franchise. What happens in this business is they are constantly looking for minority dealers, so they say, because minority dealers are very underrepresented in the United States, very underrepresented. So part of the reason why they say they can't seem to ever find any is, like almost anything else, they're that glass ceiling where a lot of times blacks come up against that glass ceiling as far as getting into the senior management positions. And that's where they pull the owners from, is there. So I took it upon myself so that when I build this thing up, then literally 5 years from now, when Honda or the big boys from Japan, Tokyo, Toyota fly over, and they want to put another, or whatever company you guys want to come up with, they come to Minnesota and they want to put a new spot in Minnesota. Right now, and this is not going to change, they're generally still looking for minority dealers. But what happens is when they come here, they say, well, we don't have any. We don't have anybody qualified. We don't have anybody ready. And that's happened time and time again. And we can't even count how many times. So the most recent one to come in was Honda. And literally, so you had some of these companies, they go out, they try to get somebody they could front, like Torrey Hunter that used to play for the Twins. One of the companies went out and got Torrey Hunter and told Torrey, hey, just say that you're going to be the owner of this dealership. We'll put you in front as the face, and then we'll take care of everything else. Well, Honda, they're not stupid. And what Honda said was, we know who Torrey Hunter is. We know that he's not a car person. That's not what we're looking for. We really do want a minority dealer. We really do, for real, is what Honda said. We really do. We don't want a retired athlete or celebrity or somebody as a face while you guys are behind the scenes still doing this. So literally they're like, well, we don't have anybody in Minnesota. We don't have anyone. What happened was they went to Chicago. They had to go to Chicago to find another Black person. So the name of this dealership right now is it's called Rapids Honda. Literally, so this guy in Chicago, evidently he already had like 2 or 3 dealerships. So they had to go all the way to Chicago to get a minority dealership in Minnesota here for Honda. So the point is that what we talk about all the time, you guys, let's plant those seeds, let's plant those seeds, let's plant those seeds. So in 5 years, when one of these major manufacturers come by looking for, qualified minority dealer, guess what? I will have already done it. Started from, firstly nothing, built the thing up, boom. That's the plan. So anyway, that's just a general outline. We'll dig into this stuff more down the road. Any questions before we close out? No questions.
I don't have any.
Well, all right, you guys are. What? I'm listening.
I would like to know, is that business plan available for the example for us?
Yes. I'm gonna have my daughter email my whole business plan to anyone who wants it. So just let Dee Dee know. You can in the messaging or whatever, and she will. I am literally going to hit send, and she's gonna have it in the next minute. And matter of fact, Dee Dee, don't you already have that? I thought I sent that to you. Dee Dee, did I send you a copy of Black Line Business Plan email?
I believe
You got it?
I believe
You have it already?
Yes, sir. I believe so.
Oh, okay. So yeah, Dee Dee will send it to anyone who wants it. Next question. Any more questions? Well, all right. Are we doing on time? 8:29? That's pretty good. Not too bad, huh? Not too bad. You guys, speaking for myself, I really enjoyed tonight's class. I really did. This is one of my favorite ones. Probably my favorite, because I was so impressed with how you guys stepped up with your stock presentations. I really was. Man, you guys, that's awesome. So me and the girls are going to set up the Black Line Masterclass portfolio tomorrow. And that stuff will always be available for you, for the next days, weeks, months, years. That's going to be available for you. So you guys can go back and see that anytime to see how it's performing. Okay. So with that said, appreciate it a bunch. Thank you guys all. Thank you very much. And you guys have a wonderful night and the rest of your week. Today is Tuesday. Today is Tuesday. So we'll see you Friday. And we got some kind of big news that's be coming right about then. So safe to say, that I won't keep you late on Friday. All right. Okay. As always, you guys stay blessed. I appreciate you. I really appreciate you. And my daughters, can you guys give them a hand? I mean, because their production has been like just awesome, just awesome. Dee Dee did a great job running that thing, and all you guys came tough, came strong. And one of the things that she said that is true is like, we're a family. We're a family. We're a family. Okay, guys, love all you guys. Be blessed. Stay blessed. If you need me for anything, I'm not hard to find. All right. Peace.
James, what time
Yes,
do you
ma'am.
want to call me tomorrow?